Well, thank you and welcome back. We are having a conversation around the boom in the cement sector. The sector has been steadily and progressively growing for the last few years. We've seen significant growth even in the midst of COVID-19. Today, there is an announcement that Savannah Cement is expanding and is looking for 350 million US dollars. And they've opted to go to London to get money from the London Stock Exchange to expand their plant, because I think they want to produce clinker, as you had mentioned. Perhaps you'll start us off by saying what clinker is, and then tell us, what do you make of Savannah's decision to go to London?
Okay, I think first to expound what clinker is, it's one of the raw materials used to make cement, and it's actually it's around 75% of cement. So what you do is you mix it with graphite and a few other chemicals or materials, and then you have cement. So it's the major raw material for making cement.
Apart from AIB-AXYS, who else produces cement, clinker locally?
So AIB-AXYS has the largest clinker. We also have National Cement and also Bamburi. And so clinker is gotten from limestone reserves. So you find that where there's limestone reserves, then you are able to manufacture clinker. And then that is what is used to manufacture cement.
Okay.
Yeah.
So where does these other small players, say like Nyumba, Mombasa Cement, get their clinker from?
I'm not sure about where they get from, but you'd say that the capacity for Kenya is around 10 million metric tons. Okay. 10 metric tons. And you find that right now, locally, we're able to produce around 8. So you have a deficit of 2, which is imported. So you find that recently the government is trying to increase the tariffs on importation of clinker from 20 to 25%, mainly because they want to encourage local production. And you also find that in some countries like Tanzania, they have totally banned exportation of clinker.
Importation or exportation?
Yeah, importation of clinker. Okay. So you cannot get clinker from outside to manufacture cement in Tanzania. So you have to do it internally. So I think that's the kind of mirroring the Kenyan government wants to do to ensure that there is local production of it.
So they opted for the tariff barriers?
Yes. So which has been met with opposition from some of the local cement manufacturers. I think it's something that is ongoing. It's an ongoing discussion.
All right.
Yeah.
Why is Savannah going to London? Why can't they just come to Nairobi, Baus, and get their money?
You know, from our point of view and how we looked at the announcement of the offer, the company wants to do it in a market whereby they can get underwriters for such amount of money. So you find that from what the management was communicating is that it's hard to get locally such underwriters for such kind of...
for 35 billion shillings?
It's 40 billion with the current conversion.
40 billion
40
shillings.
Billion shillings, yes.
Come on, Bwana. We are 80, or are we now at 90 billion US dollar GDP economy, and we can't raise 40 billion shillings?
No, it's not about the size of the economy, it's the players in the lending environment. You find that maybe from how the management at Savannah feels is that they cannot maybe convince some of the local lenders. Now, from my own look at the company, you find that...
Just a minute before you move on to the company. Have we had an experience where a local company asked for money for expansion from the market, in that to the tune of maybe 30, 40 billion, 50 billion, and failed to raise it?
Well, I don't know, because a lot of conversations happen in the private market. We haven't had something in the public domain.
Yeah, because I mean, KCB bought NBK like it was a joke.
But you see, KCB was rescuing the brother NBK, which are both owned majority by the government.
Yeah.
So maybe looking at it in terms of raising funds, it has taken us back to a question that usually is there about raising funds locally for companies.
Yeah,
there's an option of local capital markets. They would have maybe floated a bond. You saw Family Bank, EABL, Centum float bonds, which are oversubscribed.
Absolutely. This is why I'm worried that when you say that we cannot raise 40 billion.
No, that is what the management communicated. So,
you are being diplomatic, sir.
No, you have to take what they communicated and what it's there in the market and try and see whether it makes sense. Okay. And from our interaction right now, it doesn't make sense to go to London.
Absolutely.
Because I feel like the money is available locally, and you might find that in some instances, no, seeing that looking at the company has had a history. There was recently wrangles between the shareholders. There was transfer of shares between, I think, past shareholders and current shareholders. And you also find that the company was recently summoned by, I think, a parliamentary committee in terms of unpaid mining tariffs or something like that, something on those lines. So you find that as an investor then, local investor looking at a company that maybe doesn't have its ducks in a row in terms of management and is in conflict with the government, then it might be hard to raise funds locally. And maybe for them, maybe considering London is a place, maybe they can find investors who are willing to lend them.
To go high risk.
Yes. I think at the end of the day is that maybe, or from an investor point of view, given that the company has those underlying factors, then me as an investor, then I would ask for a premium in terms of the kind of yield I'm going to get, or the kind of rate I'm going to charge you.
Yeah.
And so, from my own observation, then that's why the management, they maybe opted for London, because they are more maybe risky investors who would take a bet on the company. Yes.
Even if it's at a premium.
Yes.
But let me ask, would you, I know you've done proper analysis, would you invest in Savannah, whether individually or institutionally as AIB? I mean, would you take it up if it was in the local market? As
AIB, we only stockbrokers, we don't do capital commitments. But then again, as an investor, you have to look deeply into the company. Because I wouldn't invest in a company based on what I'm hearing from the news. I would have to go deeper. I have to look at, and I look at the issue. The issue is 40 billion, and from the company's website, they say that the value of the company is around 10 billion. So that means, assuming they don't have any other debt right now, that means now the debt will be 4 times the value of the company, which would be risky. And so something I would also want to know from the management is, could you furnish me with your earnings? How much profit are you able to make? How is your cash flows? How is your debt servicing ratio? How are you able to service this debt? Those are the kind of questions I would ask maybe the management or the person offering me the bond before I could make any commitment.
So sorry to cut you short, but it's possible then that the regulator in the local market was uncomfortable with the amount that they are issuing. Because if it's 4 times the value of the company, man, that's crazy.
But I also feel like you would go to the private market without involving the regulator. The main question is, are they able to find local investors who are willing to take a bet on the company? Because as they had indicated, is that they want to commit this money in setting up a clinker production company.
Yes.
And I think the question would be, most of the companies are in the river, and why are they opting for Kitui?
Yeah, I also figured, man, you want to take it all the way to Kitui, and clinker is, you can actually share it with your colleagues or peers in Athi River. Okay,
it's a good business move. And this is the reason, because Kitui has recently, they have been discovered that there are limestone reserves, which are key to clinker production.
Significant.
Yeah, so for them, they are going closer to the raw material. And also you find that Kitui, from recent news, is that they also have coal deposits. And coal is a key source of energy for cement production. So setting up in Kitui is being closer to the...
Very strategic.
It's a strategic move by the business. So I would say the idea is good, but then good, kind of ambitious, but then again, the company really have to convince investors in terms of raising the funds. Yeah. However, from the way I looked at it is that probably they already engaged a few, 2 or 3 private investors who are at advanced stages of negotiation.
Locally or internationally?
Probably internationally, so that they can now get to the point whereby they will say that we are going to go to London, because as an issuer or as when you want to float a bond, you have to maybe first test the market. Send your pitch book to a few potential investors, gauge the market. If it's probable, then maybe you can go public on it. So for me, I feel like I think it's something already in the works. They may be waiting for a few confirmations here and there. And actually, the management has said that they had indicated they're going to have a communication at the end of January, which I haven't seen, but then we'll wait and see.
Okay.
Yeah.
Look, I love their confidence about this economy, and because they are willing to, go out ambitious and invest something 4 times their current value, just to make sure that they produce clinker for the local market. I mean, it's bold, it's very courageous, and it's out there. But anyway, I had, I had mentioned a little about importation of cement, but the concern is perhaps even other construction materials, because other listed companies would struggle from this, whether it's Cabasid, whether it's Crown Badger. Do we have a problem of too much importation at the expense of the local industry?
Well, if you look at the construction materials, the ones that we import is the ones that we don't manufacture locally. So you find that the effect of that is that, and it's actually a key contributor to depreciation of our shilling, because you find, again, I'll take you back to the MPC briefing, whereby the imports were growing at a higher 25%, higher than the exports at around 11.1%. So you find that the depreciation of the shilling is making importation a bit costly.
Naturally so. Yeah,
given the fact that the economy is growing, or the economy is recovering, so there is a lot of urge maybe to do construction. You have to import some of the raw materials for steel manufacturing, clinker production, and then on the other side we are net importers of oil, and you find that the prices of oil as of today, I think they're around $89 per barrel, and they're headed to 100.
They are.
So the more we import, then the more it becomes, or it is at a disadvantage then to our currency. So that's the main effect that we are having in terms of a lot of importation, contrary to the exports that we are having.
Yeah.
Yeah.
I want us to end the conversation with the announcement today that the government is seeking another 70 billion of infrastructure bond, because they want money to do some other projects. One, what are your thoughts about this move, considering the fact that we are already too indebted? I think we are now at 9 trillion. Two, how will this affect the cement and manufacturing sector?
Well, I'll first look at it, going to your first question, and then I'll look at it at an investor's point of view. Because recently in the market, in the secondary market, you find that trading has been mainly driven by IFBs, the infrastructure bonds. And from where I see it, this bond, I expect it to perform well. It's actually 75 billion. It's a 19-year bond, 75 billion. The coupon rate is market determined, the same as the yield. So you find that going by the current or the most recent yield curve, the 19-year papers are trading at around 13.3%. And going by historical IFB issues around last year, they were issued at around maybe 12 to 13%. So maybe I do not expect it to get to around 13.3, but it should be yielding at around 12 to maybe 12.7, 12.8%.
Yeah.
So that would mean good returns for investors, because in this year, with all the fear and the jitters that are there in the market, then investors need to know that they're in a place whereby they can comfortably get returns of around 12%, 12 to 13%, which are tax-free. So IFBs are usually tax-free. So that's why you find that that's one of the reasons why you find that investors rush to buy them. Now, on the other side, then that is on the demand side, like investors are demanding higher returns. So on the supply side, whereby the government now wants this 75 billion, as I said, my expectation is that there is going to be an oversubscription, probably 100 billion. And you might find the government accepting probably higher than 75. So that means that it's more stock of debt increasing, and it increases, or it increases our debt to GDP ratio. I know it's close to 70%,
yeah.
And it's rising because we are borrowing day in, day out. And another positive thing from that now, before we wrap it up, is that KRA for the better part of the last 12 months have been consistent in terms of revenue targets meeting. So that's positive, and that would mean that there is less need for borrowing. But then given the commitments that the government has, then you find that there is always be need for borrowing. So I had earlier said the government should take advantage of the PPP laws that were signed recently, because I feel like that PPP would be very instrumental in terms of infrastructure funding.
As opposed to the bonds.
Yes, because getting into PPP agreements with maybe private investors
is much easier.
Yeah.
We have less than a minute, that's why I'm cutting you short.
Yes.
How will this affect the cement manufacturing industry?
I would say if this then is going to government projects, then I'm expecting the cement manufacturers will be rushing to score supply contracts with these infrastructure projects.
Yeah, and
so it's a positive. It's a positive in terms of
so
supply.
Savannah's bet might actually win.
Probably.
I wish them well.
Okay.
Thank you very much for joining us. Well, thank you very much for joining us, viewers. We have had quite an interesting conversation around the cement manufacturing companies in Kenya, in particular the two listed ones, and Savannah's ambitious plan to establish a clinker in Kitui. That today was Markets Today. Join us again tomorrow at 4 p.m. same time as we discuss the happenings at the market. I'm your host, Odhiambo Ramogi, and see you soon. I will leave you with the announcements of the currencies as were traded in the market today. Goodbye.